Stars, I'm a fool for your love.
So, good evening, everybody. In today's session, we're going to go through what? Trading for a living and building a track record, or trading in a professional manner. Don't mistake me, trading for a living requires a professional trader. Good. Not everybody can trade for a living. Good. But what I'm saying is basically the risk parameters. You got the risk. You got the risk basically parameters for trading for a living, or let's say management. Good. Service is different. It's totally different. Why is it totally different? Anybody get an idea? You can drop it in the chat. I don't want no sleepy people in here. You gotta participate. You always gotta be active. So, why is it so different trading for your living than trading for an investor or managing investors' money? Yeah, answer in the chat. This is an important topic, by the way. If you get the perspective of this one, you're going to always learn what? The psychology behind money. Good? I always understand that, okay, I'm disciplined enough. Nice. Now I see them flowing. Yeah, psychology. Investors don't like big drawdowns. That's nice. Is their money. At the end of the day, it's your money, their money. Trading others' money is way easier. It's way easier. It's like, yeah, for me myself, I trade my own money as a demo money. And I trade others' money as a demo money too, but like I pay more attention to my risk, right? Because there is my reputation in line too. Yeah, responsibility too. So you see this. You see this. This is the whole picture, right? This is the whole picture. This is the whole picture. So standing here, yeah, standing here and looking at the picture from this side won't let you see the entire frame, right? This entire picture. So in fact, when you go to the Louvre in France, or you go like to museums, or if you're like art collector or something, you don't just go stand in front of a painting or something. No, you actually like stand 2 meters away from the painting. So you see all of the angles of the picture, right? You see all of the angles of the picture. Why am I saying this? Why am I saying this basically? What I'm saying basically is what? Is you need to always consider every single element, inside the picture, right? You need to see everything in the painting for you to understand the meaning of it, and for you to conclude an idea about the painting. Because if not, you're just gonna do what? You're just gonna see it from one side. So always try to see it from multi sides. Or if it doesn't work like from multi sides, you gotta like, okay, look from one angle and make sure that that angle is showing you 100% of that painting too. Good. Why am I saying this? I'm saying this basically because of what? Because of the answers. I'm not saying the answers were wrong. No, the answers were pretty nice, right? The answers were pretty nice. Yeah, this is going to be uploaded, right? So, but it gets to the bottom of what? That you need to ask yourself this question first. Why am I trading? What is it that I'm trying actually to achieve out of trading? Good. That's one important question because if you know the answer for that one, then starting from here, good, your journey won't be like this. No, in fact, your journey will be a steady curve, a linear curve, but with too much corrections, definitely. But it gets to the bottom of that answer. Why are you trading? What is it that you're actually trying to achieve out of trading? Answers for that too. I need answers for that. Nice financial freedom, right? For freedom too. But do you know what freedom actually means too, right? Like if you think like financial freedom, okay, financial freedom basically means that when you're generating incomes that covers and exceeds your expenses, you're already financially free, right? But then you integrate the financial freedom with time, you get what? You get power, right? You get power. You get power. But to be a powerful person, you don't be powerful with your money. No, because you can lose basically your money. And you as a trader, you know that losing money is something normal, or losing in general, right? But at the end of the day, you win way more than you lose, right? So, however, Jordan, yeah, no, perfect. Yeah, what I'm basically trying to say, that's why I start with the louver, with all of this, is you always gotta look at the bigger picture too. Like find a purpose out of things, you know, or find a purpose, for your life. That's important because at one point, a trading is going to be good with you, right? If you don't give up, if you really put in the work, the trading is going to be good for you. If you all way you need risk management at the end of the day. That's the only thing that or element that can really fuck you up, which is risk management. So if you align all of these elements with a purpose, that's going to be ahead of a nice journey. And I'm basically going since I started all of this. I'm still sharing my steps. I'm still sharing my own personal experience. I don't research to give topics or stuff. No, I share basically what I actually go through in life, right? So why do I feel like this webinar is really important? I'm gonna tell you why. Because 3 years ago, I wish I had someone to tell me and to show me how to trade properly, Now making money. Trading is not just about making money. Yeah, definitely we all want to make money. But it depends also in the fact that are you in it for a long run or are you in it just like to make a quick cash? Both are possible, by the way. Make a quick cash is really possible, but can you handle losses, right? That's the best answer to it. Yeah, trading is challenging. That's how I took it. Trading is the only career like on this planet that's challenging you as a human being and making you always developing yourself to the better version. That's the best answer. Yeah. So a couple of years ago, I wish somebody told me that son or whatever, you need what? You need a track record. Good. You need a track record. Now listen carefully because I'm gonna tell you how to do this. 100%. Like A to Z. Why do you need a track record? Good. Why do you need a track record? First, forget about clients, forget about investors, forget about like getting funded, forget about all of this. Forget about all of this. Just focus on one thing. One thing is what? This track record, which is your trading history, is going to give you what first? First, it's gonna give you data, right? Data. It's gonna give you data about your trades, right? And your trades are going to give you data. We say it about trades, decisions, behavior, right? So those are the kind of data you're gonna what have from your track record, right? So your decision, your decisions basically, all of the data you're gonna have is what? Is trades, right? It's just trades, results, minus, plus, entries, stop loss, TP, all of this trash. And then you do what? And then you want to analyze these trades, right? You want to analyze these trades, go back to them and see how you actually why did you lose this? Why did you win this? And you start making categories out of this and you start like filtering your data, right? So that's a reason. Another reason is you're doing it properly. How are you doing it properly? Basically, you're not rushing your process. You're not rushing your process. Why? So at some point, you just I don't know what I'm drawing. Whatever. At some point, you're going to create your own pool, right? Your own investment pool, which is pretty easy. Which is pretty easy. I swear, it's pretty easy. I've done it and it's pretty easy. Good. So now, to do so, you need to have two different accounts, right? You need to have two different accounts. You all know that I have two different accounts, right? My personal account and the account I'm conservative on, right? Both are the same track record though. Both are the same trades, by the way, too. But my personal account, I just risk more too. So we need two track records. One which is going to use for what? Trading for living. It does anybody know what I mean by trading for a living? Yeah. More answers. No, basically. Sorry for that. Yeah, it starts with covering your bills, but however, once you go full in trading for a living, that means what? That means you already have savings in your account, in your like in your bank account for 6 months. So you're not basically trading for your bills. No, you basically trading for you to be alive. Good, like not just to pay bills. Trading is the foundation, or trading is your career basically. Trading is what you do on a daily basis. Yeah, through life, bills, everything, but I want you just to think outside the box. I don't want you just like to keep on being dragged in the system. Yeah, we all pay bills. We all have expenses, 100%. Right? But don't make that I want to succeed because of my bills, or I want to trade better because of my bills, so I have bigger bills too. No, because you get stuck into a tornado. That's not never gonna end. Exactly, Jordan. Trading for a living, basically. You trading for your life. You living good. If you wanna compare yourself to somebody else, you living good. 100%, you living good. You're a good middle class household or something, individual. Good. And don't forget the fact that you're controlling your time. Good. And you building your life basically with that account. Good. So you building your life basically with that account. We all at some point, yeah, excuse my sketch, I'm not a good artist. We at some points were babies, right? Or like me myself. At some point I was like 1 day old. Good. And now I'm 26. Fuck. I'm pretty now I'm 26. So I didn't just go from 1 day to 26 in a couple of trades, right? Yeah, that sounds silly, but but I didn't go like from 1 day to 26 years old in a couple of trades or in a couple of days or a month or a year or 2 3 years. No, that took what? That took consistent growth, right? That took consistent growth. And during this consistent growth, you gained experiences, right? You build up the knowledge, you get experiences, right? So you lived your process. Whether you lived your reality or a reality somebody else programmed it for you live the reality. And you live this reality as any human being or like any human being on this planet. You live every day by its own time, right? You didn't skip days, you didn't skip months or weeks. Now, now let's do a little bit like a small example about something. Yeah, I need a volunteer who's gonna give me like how much does or she how much does he or she need a month to be financially free every month. Did you even calculate that? How much a month do you need? 2000, okay, nice. 2800. Forget about currencies. Forget about currencies. Yet talking numbers. So let's say like yeah, I got 2000, 2800, 3100, and I need four. So let's say the average is what? The average is three. The average is what? The average is 3 grand. Good. Okay. So for us to make 3 grand a month, realistically, 100% realistically, how much should we make a day? Those are what? Those are expenses, right? That's our zero. That's how I call it. It's like my zero every month is like 4 grand. Like this is my zero. This is my 0.3. Good. Now all good. So 200, 150, 150, 150, 150. Okay, so let's say let's say we gotta make how much? We gotta make 150 bucks a day. Good. We gotta make 150 bucks a day. What account size can we make 150 on it easy with no stressing the account, without stressing the account, without pressuring the account? Just giving it a space, let it breathe. 10K, 20K. No, where are my students? What's up? 10K, 20K, 10K. To make 150 a day? If that, 5K. More answers. Don't be shy though. I know some of you who makes 150 with this way less money. You know? But yeah, we said it's gonna be like sustainable and it should let the account breathe, right? So let's not trip. 3% a day. Let's not wait. Shut up. Let's agree on something. Good? Let's agree on something. Once we're talking less than 50 grand, let's talk figures. Good? Let's keep on talking figures. Let's not talk percentages a little bit. Let's just talk figures. Good? Let's just talk figures. Let's just talk figures. Because the trick in trading is not percentage. Yeah, it's about risk to reward ratio, 100%. But that's later on. That's after you figure out your figure that you're gonna risk. Good. That's it. So yeah, figure. No, there's 5K easy. Okay. You can make 150 on 1,000 account. Or wait. Chill up. You can basically make it from 500 to infinity, you know? How the hell can I type infinity? Damn, I don't see. Whatever. To infinity, basically. If you have 500 in your trading account, if you have 500 in your trading account, thanks. If you have if you have 500 in your trading account, mom, see that. Again, wait. 150, you need 150, right? So Do you even realize why do you need capital? What do you need capital for? Yeah, why do you need that? Why do you need capital? Yeah, I know it's a dumb question. Just answer it. Why do you need capital for? Why do you need capital? Cover margin. That's a fucking oh nice. Nice, nice. No, not leverage. Jack, not fucking leverage. Fucking margin. Bro, you ain't buying nothing, basically. You're buying a contract that's stating that you're going to make money based on the difference between prices, which is the difference between market price at the time you bought or sold and the current market price. So, and to do so, to buy these contracts, you need to cover up the margin, right? However, the leverage functionality here comes why? Because you need the leverage to minimize the margin cost, right? You need the leverage to minimize the marginal cost. Yeah, you basically, yeah, definitely you're risking something to earn something. But dude, so basically you're risking trash to earn trash. 100%. You're risking money to earn money in here, right? But however, you have the fucking chance to what? You have the fucking chance to be smart. Excuse my friend, sorry. I'm trying to minimize this. You have the chance to be smart and do what? And learn how to manipulate your margin or your broker, your math, basically. How to really understand like financial math or trading math. Let's put it that way. Trading math. You start manipulating your margin, your leverage, with your deposits. That's when you solve a big ass trick in the market. Yeah, Nick, I see you getting way better with this. I see you getting way better with this. Like, I see you guys, like, most of you guys are getting way better with this. Good? So, back. So, we say what? We say you need 3 grand a month, right? That's your zero. That's your 0 point. To do so, you need 150 a day, right? You need 150 a day. And to do 150 a day, you need 500 and more, right? You need 500 and more to make it. Let's say 500 to 2 grand. Anything above 500 you can make it because below it is going to stress your account. Now I'm not talking about like emotional stress. I'm talking about financial stress. I'm talking about systematic stress. Good. That's something else than chemicals. That's physics. You create a stress point on the account, which is going to be most probably fail no matter where you take it. Does that make sense? So no, and that's for all of you FTMO traders, dude. For all of you guys who are trying to pass the verification of FTMO. I did this for a reason. We have like a couple of people in here, our teammates. They're doing the FTMO challenge, so I thought this would be a good idea for all of you too. So you got that's one type of account. Good. That's the trading for a living account. Then you got what? You got your track record basically. You get your track record basically. So on your track record, you're going to be operate differently. On your track record, you're going to be operate not figures wise, not just figures wise. So the trick about figures, if you really learn it in properly, you can apply it anywhere, and it's not wrong. It's even better than percentages. Good, but however, on here, on here, or both accounts, both accounts, you need risk diligence. You need to really well educated from risk management aspect or side. You really need to be good at risk management itself. And the fact is that no matter what, even if I have a losing streak, I'm still gonna make money. I'm still making money with this. But the difference is between both in here. Here sometimes, and here sometimes you're going to be risking more than 1%, right? Or if you notice that, and sometimes your risk per trade is going to be 10%. Talking about percentage. Why? Because you basically, that's your capital, and you made 150, and you're risking like 20 bucks out of these 150 you made. That's now 1% on this capital too, plus this, right? You get what I'm saying? Yes or no? Just yes or no. So good. However, in here, your percentage or risk percentage gotta be always what? Modified or based on your current equity curve. Based on your current equity. You cannot deal figures with this. You cannot deal figures with this. Because this here has nothing to do with this here. Yeah, 100% you're doing the same thing. You're doing the same thing. But you can afford big losses in here because it doesn't matter with you because you got your house money, right? But you cannot do that on a track record account. Why? Because this is the client's money too, right? This is the client's money too. This is basically the client's money. So instead of you taking advantage of figures and percentage or risk to reward ratio at the same time, no, don't be greedy. For your trading for a living account, think figures, good? Your personal accounts, basically, think figures, good? On your track records accounts, which are like your track records, your investors accounts, everything that has to do with trading, not your money, good? Or you creating a history for yourself, basically. You gotta be in here, and you gotta be thinking percentage wise on the current equity curve because the way we operate on our trading for a living account, at some point we forget about our balance or about our capital. Basically, we seriously sometimes forget about it. Why? Because we got our profit, and then this balance with the rest of the profits, you know they're just going to be the margin requirement to cover my deal, right? So for me to open that contract, is that clear till so far? So now remember this. Yeah. Now remember this thing that investors invest to generate income. Sorry, to generate profit or percentage wise profit, whatever, They need return on their capital, right? But however, nobody is basically going to invest in a return on or on an ROI that's really massive, except they really understand the risk associated with this market, and they're like they're not risk averse, They're not risk averse. Good. Which is you cannot find that much. You cannot find that much. And you don't even want it to. You don't even want it because once you think about a track record account, once you basically think about track record account, you'll be considering one simple fact that you can be trading 100 million. Yep. You can be trading 100 million. That you can be trading 100 millions. You can be trading a million. You can be trading 100 grand. And it's not healthy. It's not healthy to think in figures here. You good? If that money is not your money, why? Because you're basically taking the effort and the energy to think about something that you should be even thinking about because it's not your money. Basically. Once you get your withdrawal, your 50% or whatever, like your share or your fees, that's when you start thinking about figures. That's when you start thinking about your money. You only think about money, about your personal life, like figures, sorry. You think about figures, about anything that has to do with your personal private life. Your being, like you as a character or you as a create, like, I don't know, as a human being, as a creator. So we agree on this so far, right? Let's talk now about your daily figure. Good. About your daily figure. About your daily figure and percentage. Good. Your daily figure and percentage. So let's say you have you have 200 risk. You have 200 to risk today. You basically have 200 to risk today. And go you got 1% coming out of what? A 10K account. Good. Do you just risk the whole 200 bucks on one trade and the 1% on one trade once you start your day? Answers yes, no, yes, no. How do you start your day basically? How do you start your day? How do you basically start your day? I need answers. I need answers. How do you start your day as a trader? You pull up on a chart, you start your trading session, you already know what you're gonna risk for the day. You found a nice deal. How do you start? Or nobody thought about it. Uh-huh, nice. So you prefer losing a whole 1% on one trade. Stay easy. Coffee. Jesus. Wait. Yo, chill out. Yo, chill out. You're tripping. Ah, wait. Uh-huh. Nice. Nice. Zalin. Nice. So, for you to identify this question, basically, you already have a set of rules for yourself, right? You already have a set of rules. Forget your human being instinct. Because believe me, you're gonna lag. Sometimes you're gonna lag. Good. And when you lag too, or you drift, you don't wanna just do what you do when you're mad, right? It's not gonna be fun at all. So before that, you already done what? You already drank your coffee, meditated, fought, trained, whatever. You ran, you read 20 books, I don't know, you developed a new nuclear rocket, whatever. You've done everything. You opened your chart, analyzed the market, checked your trading plan, your risk for the day, blah blah blah, so on, A to Z. You saw a deal now. Now you have a setup. You gotta execute. Your 1% is one lot. Are you just going to open on one lot directly, or you're gonna start building up for the day? My, I don't do nothing, Jordan. My life is basically is about trading, so I'm always ready. Yeah, build up for the day. That's the real question. Does anybody in here know actually what building up your day is? Progressing through trading. Hmm. So me myself, what I do is when I start my day, my trading day. Yeah, yeah, multiple trades, 100%. You split up your percentages. Let's say this what this 200. You took a portion of it. You took like $30. You took $30. Maybe what? You took 30. And out of the 30, you made 200. It's possible, right? Is it possible to make 200 out of 30 bucks? You're risking 30 bucks. I just want to like I'm testing perspectives too, like to see how you guys actually correlate lot size, risk, like the figure of risk or the percentage you're going to risk with the mechanics, the system itself. Okay, wait. So with 30 bucks, how many pips you gonna make? What is your risk to reward ratio on this gonna be? 1 to 5, 1 to 6. Okay, whatever. First, you don't answer such a question without a lot size, without a stop loss. There is nothing fixed in here. We talked about this many times. Nothing is fixed. It's all variables, right? Mostly stop loss is less than 10 pips. Is less than 10 pips. I just put a 10 pips, and you guys put a 10 pips, right? So let's say you got like 6 pips of stop loss. What is the calculation now? How many pips do you need? Good. What is the lot size needed? What else? How? What's the risk to reward ratio then? Yeah, I say not 10 pips is stop loss, 5 pips. Nice. How many pips? Uh, how many pips do you need to make to get that 200? Or not? Wait, not 200. Not 200. The 150 you want to make. The 150. The 150, which is fuck. 100 pips. 100 pips on 0.6, that's 600 bucks. Uh-huh. Yeah, 25 pips. 25 pips. Basically, need. Finally. Spreads? Yeah, spreads are what? 1.6, 1.2. It doesn't matter, man. It doesn't matter. Like, I trip about spreads so I can maximize my lot size more. You don't need that. At the moment, you don't need to do that, because you're gonna lag. And I don't want to lag when you're trading 5 lot size, or you're dropping 5 standards, 500 grands on a trade, and you don't place a stop loss or you start adopting your stop loss, and then you be bluffing yourself. So forget about spreads. Forget about spreads for now, because if you place your entry accurately, fuck spreads. At the time, at the time you're placing your entry, that spread should be tight as fuck too. Even if you have a standard account. No, that's the thing. That's the thing. So the way I operate, which most of my old folks they are with me now, they know how I operate and they operate the same now too. Good. Yeah, we think about risk. We think about percentages. Good for our professional life or our professional trading career. Good. But once it comes to our trading for a living account, hell yeah, we operating even better than here too. By the way, like return wise, we operating better than here. But our basically our risk calculation, what I'm saying about it is different. It's just different. And you need to be ready for you to apply what you use in here on here too. Good. You need your investors to have really good mentality, to understand this, to understand what you do when you're trading for a living account, and let you apply it in here. Good. No, these are my bets. Once I calculated my risk, once everything is ready and I'm about to place a trade, I'm betting a bet. Good. That's a bet. That's I put my money on a direction. Good. On an outcome. That's a bet. So let's talk about what? Let's talk about this. So we say 25 pips, right? We say we need 25, 25. We need 25 pips. Good. Good. How many times a day? How many trades? How many trades can you find a day? That gives you 25 pips. I'm more. Fuck. I like the answer. Infinity. Nice. It's not infinite, but tons of trades. Tons of trades. Right? Tons of trades. Wait, let me make sure I recorded this. Yeah, nice. Yeah, it's recording. So let me show you this. Let me show you this. Let's go to our chart. Okay. Go over to our chart. Go to where? Why is this like this? I guess this was Arabic one. Nah. Or let's zoom out. Go where? Yeah. Let's zoom out. And look where we trade what? We trade in New York, right? Or wherever. Doesn't matter. Or just let's focus on one session. Sorry. Let's just focus on one session. Let's just focus on one session. So we trade in what? New York. Mainly New York. Good. So before New York, definitely we got what? We got London, we got Asian, right? Asian, London, New York. So you got the data of what? Asian, London to trade in New York. Good. You pull up to London at the end of London, so you be prepared for the pre-market volume and the open market volume. Boom, boom, you get it done because then after that she start getting squeezy, right? It's not worth it. So that's your first trade, basically. Your first sell, your second entry, right? Another sell stop, another sell, a buy, another buy, right? Or wait, I don't want you to trip. Let me do it slower a little bit. Yeah, good. Good. So that's when you pull up in here, right? You look to the left, see, damn, I got supply, right? Prices already what overbought, right? Wherever you just like, I'm not talking about entries. I'm not talking about nothing. Just like trying to show you how many trades are there just based on price action with no extra elements. Yeah. So we trading in here. What matter is this one, right? All of this data. Once it goes below, we look to the left. All of this data, right? All of this shit. All of this data, right? So far, we know that a sell stop in here, right? Another sell stop in here, a market execution in here. That's one trade. That's two trades, three trades, right? And what else? Dude, yeah, sell stop. No, 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 wait. A sell stop. Can even get like a nice buy here too, right? I'm talking orders flow, bus theory, basics, basics. Yeah, that's one, two, three, four, five. We got buy in here, right? Six, close above. Seven, we got supply. Now the first one, second one. Nine, support, right? 10, supply. 11, boom, sell stop. 12, boom, sell stop below, right? A buy. You see this wick? You got a buy, right? Ah, we just called, I don't know, 20 trades with tons of pips. And what? What's this? That's not even an hour or 2 hours, That's basically, yeah, that's basically, yeah, 120, 150 minutes, sorry. 150 minutes. More than like 20 trades, I guess. I lost count too. Like a buy, another buy too, right? Broke, another buy too. You try to sell in here, you get break even, wherever. But another buy too, overbought already. You can see this area tricky. Another sell, yeah. Buy, you got this wick, down, sell, a sell stop to, you look here, yeah, this demand, buy, sell. As I can just keep doing this all over, just talking about like basics, right? Then we start integrating the more elements we learn. We don't even trade in here because we know there is no such volume, right? That's why we're interested in the pre-market, the open, and the close of the market, basically, which is pre-markets open, you know, the pre-market and the open of the session, or pre-market, the open of the market. That's when we're interested. We have free volume, basically. We basically have free volume. Does all of this make sense? Do you get what I'm trying to tell you? Do you really get what I'm trying to tell you or to show you? Do you get why I execute? I don't know. Sometimes I execute 1, 2 trades. Sometimes I like most of the time I execute like what 7, 10 trades a day. So how can you monetize all of this? How would you monetize all of what I just gave you now? Answer. Learn to share your values with others. You're learning. We discussed trading before. You got three main levels. You're a student, a practitioner, a master. Good. I'm not saying I'm a master, but you're a practitioner and a student. I'm not a student. I'm not either a practitioner. I got my own system. I got my own edge. A practitioner, the one who does what? Who practices trading and trying many things till he finds what? His edge, which is the mastery of blah blah blah. Good. So at these 2 points, 2 levels, you share your values. So you increase your vault, your knowledge vault. Yeah, straight up. Straight up, basically. That's just like to convince you that you don't need to lose all of your money on one trade, on one day. And at, and at the same time, you learn how to utilize all of this. Lots of opportunities. Lots. You filter them. I just filter my trades based on the fact that I don't love drawdown. That's it. Because most of you saw how I built my money. I'm a risky dude. I use big lot sizes, but I don't have a drawdown. That's why I don't like I filter my trades that way. No drawdown. Yeah, you're gonna make tons of money once you learn properly how to make that money. To see, that's a story. Okay, we done. We done with decision. Nice. We done with decision. I gave my I gave my main key points. Good. Let's take 30 minutes break and we coming back to what? To our weekly analysis. See what's up. Gold looking pretty interesting. I don't know why. I didn't even check it that much last week. Bro. No, I don't blame myself. You you know why? I'm not that kind of a dude. So when I was mad when I missed the 1,200 pips, and I caught only like 40 pips of it because I had 20 lots there. You know that would have made me like a million, and that's like yeah, whatever. Now fuck it, man. I can basically have many trades a day and make money out of them. But it's just that trade was a boost. It was supposed to be a boost. That's it. It was just a chance or like an opportunity, that I caught, but I didn't keep. That's why I was mad at myself because I caught the opportunity, but I didn't keep it. I didn't appreciate it. But that's not what matters because we talked about this 20,000 times, Jordan. You're really starting from here. You're steadily growing, man. You're growing. And then this opportunity comes if you catch it and monetize it good. boost you up. Then you're gonna keep on growing steadily too at the same time till another opportunity comes. Then another opportunity might come, just like boost you to the downside, correct you to the downside, and then you keep on growing steadily. You should be always steadily growing, man. Always. Or you'll just like at one time like this, you'll just lag and disappear. And that's a robot. That's not a human being. Even when you die, you don't just fall all the way down. No, it's just gonna be like the you're gonna keep all of your history supporting it, right? So fuck that 200 pips trade. Why? Because you can basically make 200 pips. I don't know, a day, and on gold, 200 pips are nothing. I don't like that stress. I don't. I don't even stress myself for 200 pips. I might actually give it extra push for 1,000 pips. Or if I'm looking to buy and hold like till 2000, 2001, that's that will be a try. 6,000 pips, worth it. But that 200 pips, no, not really, because you can eat like two trades and make 120 pips. One trade can make you 70 pips on gold. Like this is a 90 pips move. This is a 90 pips move, basically. In what? Unless, I don't know, in 10 minutes, you don't trip with gold about this, or gold gonna punish you.